Okay, so it was a good day on Thursday. Um, in hindsight, what we want to be paying attention to is the ATR on any given day. Um, in Stacey Burke's um, methodology, that could have been a trailing stop, but the idea behind this strategy is to be in and out of the market in and around the 3 hour window, um, and not sitting at the screen all day. So Um, you can apply a trailing stop to it if you wish. The daily ATR is around about 200 points. So exiting at the first upper quarter of the um, handle below um, was leaving a lot of money on the table. So we got out in the 70s, and this continued for a further um, 60 pips. Um, so that's something to note for the day ahead, non-farm payrolls. Um, in terms of sterling, now what we might expect is a correction up to the um, void of matching bids and offers. So we might see potentially here. I mean, if we've got this W formation, so we've got support potentially in and around here. Um, let's have a look into 50 perhaps. So so long as the 50 area holds, so we're between first quarter, the second quarter of the handle. So in here to 50, we will be looking for longs into the data, into the New York session for a move down. Now the thesis is that if the non-farm payrolls are expected around about 260, somewhat down from uh, 315, I think it was in August. But nevertheless, the unemployment rate is expected to hold its current level, which will be supporting robust growth in average hourly earnings. And with US September CPI around the corner, um, then and with higher energy prices due to OPEC, um, and then we've got we had New York Fed President Williams talking about softer goods inflation are not going to be enough to offset higher services inflation. So we had a strong services number that sort of superseded the manufacturing data at the start of the week. Um, and the jolts, which now basically is being priced out of the market. So those that were expecting a pivot on the Fed, um, um, have been sort of washed out. So an inline number for payrolls would be expected to lift yields and the dollar. So there's the thesis. Now, if we look at cable on its weekly template, um, we're below last week's high still. Um, you've got a key fib level in and around here on 1080. So below there, you've got Friday's New York session low, last Friday's, as a as a first target, really, 110.25. Um, Now, let's say we were up in here prior to the number. We can add a bit on here, so 250 points maybe. I mean, we're looking at a stretch to come in. So if we've got the high of the week up here, the low of the week, um, low of the week is over here. So we're looking to take out the low of the week for a fresh low of the week into 109, the figure, at a stretch, and 110.25 as a initial first target. Friday's New York session low. So essentially, what we're doing here is we're going to be taking out longs, committed longs from last Thursday's business. So we'll have break-even traders in and around here. Anyway, we'll see how we get on with it. But that's to bear in mind then. So we've got an ATR of 200 points. Now, whether cable is the way to go, I mean, if we look over to the weekly currency strength index, we've got the dollar, which has performed the best, besides its initial drop, and then presumably this is going to be the Canadian dollar, I expect. It's been lifted up by, oh no, it's Swiss franc, that is, okay, and then the euro below that, and then the Canadian dollar below that, right? So the euro, because I mean we've got the yen, Aussie, and sterling have already taken a beating. So the thesis is that there's plenty of mileage yet to go in the Canadian dollar, euro, and Swissy. So those might be interesting pairs to look at. So the weekly template for funds, dollar CAD, we've got last week's high and this week's high up here. Um, we're at yesterday's high. We've got the week's high down here. And then we have yesterday's low in here. We've got this sort of W formation as a bearish factor. For the immediate future, down into here. We put our fib up there, down into a 38.2 meeting structure over here. Now, if this were to hold, then up we go. To give, we've got the price and balance between here and here to fill into the neckline. Or up we go. Now, this is all on the basis that a Fed pivot is just not possible against this backdrop where oil prices are marching higher on supply destruction. Now, usually, you might expect the loonie to be correlated with that. Let's have a look at the US oil scenario. So yeah, so we've got this W formation to pull oil in. It's had its run for the week, so that should give us another um, engine for higher dollar CAD. Now we'll also be having Canada's employment report. So anything on the downside in the Canadian employment would be beneficial, um, but there'll be more of a reaction really to any downside than upside, and the non-farm payrolls will take more importance. So the ATR is about 150 pips on dollar CAD. On the daily chart, we're still on the inside of the trend line, and that M formation is not proving to play out, where the price is breaking above the neckline, which is bullish. So, I mean, we can have a retracement all the way into the neckline, or we've got this acting as support around about 136.80-ish, maybe a dip in below towards a 38.2 to the halfway mark. That will tally up with the W formation's 50% retracement into the structure over here. So the thesis from an hourly point of view is we've got this inverse head and shoulders. We've had the low of the week, peak formation. We've come inside of the trend, and we're looking for a continuation higher, depending on the non-farm payrolls outcome, from this kind of support base over here, stretched across to here, dips into here, or a buy. Maybe in the London session we can have a blow off or a scalp for the turnaround in the US. In terms of how we're doing for the week so far, we're 7 and a bit up percent over 14R. So let's try and go out with a big bang tomorrow. Friday payrolls.